Man, oh man, what a day, what a day. Well, we're back to work tonight, guys. Hope you made some money out there today. Boy, it's Tuesday evening already. We're getting ready for a very important Wednesday trading session. We have a lot to cover in tonight's video. That deep pullback we talked about last night rolls over into a reversal. We've got some more big news coming tomorrow. And boy, judging on the big moves we saw this afternoon, I'm getting excited for Wednesday. Just thinking about it here with you guys. As always, I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. Before we jump in and talk about all my favorite trades for Wednesday, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in and supporting the video. If you guys enjoy my content here, hit that like button. And don't forget, give me a shout out in the comment section below. Thank you guys for tuning in and watching here tonight. But enough of the intro though, right? Tuesday is behind us. Wednesday is not going to trade itself. And I'll tell you, we get some big news tomorrow, some nice big moves on the charts. Where are the best trades setting up for what will be a very busy day tomorrow in our trade room? Everything's bearish, you can see. S&P is bearish, Nasdaq's bearish, and of course oil is bearish here going into Wednesday. The key word or the key phrase for tomorrow right now is short the bounces. I have 3 different ways to make money to short bounces. We're talking about breakout pullbacks, we're talking about bull traps, and we're talking about reversals on the deep pullbacks here for tomorrow. So we have a lot to cover in this important video tonight. Before I jump in though and talk about each one of these charts and my favorite trades for tomorrow, let's all get on the same page for tomorrow. Tomorrow, of course, is a Wednesday, not your average Wednesday. We have quite a bit of important news here for tomorrow. Now, we will hear from Jerome Powell tomorrow morning again at 10 o'clock Eastern time, but he is not the big news for tomorrow. No, we heard from him today. Most of the market's reaction today was off his initial testimony. He will likely be saying the same thing tomorrow morning as he gets in front of the House Intel Committee, I believe it is, tomorrow. So he's not the biggest news for tomorrow. The bigger news for tomorrow is the JOLTS report tomorrow. And the reason why, if you listened to or if you went back and read the transcript from Powell's testimony this morning, he basically said that they may need to hike rates more aggressively at the next meeting based on the coming data. And you know he's talking about that JOLTS report tomorrow, that jobs report on Friday, and that huge CPI number coming on Tuesday next week. So we have to now fast forward now or look forward now. Jerome Powell will likely be repeating himself mostly tomorrow morning. The big news tomorrow is that JOLTS report at 10 o'clock. If that number comes out stronger than they were expecting, that just adds more fuel to the fire of higher rates, longer, more aggressive rate hikes, as he touched on in front of the Senate Banking Committee here this morning. So keep that on your radar. And then don't forget, tomorrow afternoon, we've got the Beige Book at 2 o'clock Eastern time. That may definitely be another market catalyst for us tomorrow afternoon. So keep that on your radar. But 10 o'clock Eastern time tomorrow, 10 o'clock, be aware of that JOLTS report, another key jobs report we know the Fed will be watching. Now back to our chart tonight, because obviously we know when the catalyst is, but the news is noise, right? The charts are really what tell us where to find entries, where to find exits. And guys, I'm going to go over all my favorite trades on each one of these charts here tonight. If you like making money, I would definitely watch this video all the way to the end, because every trade I talk about in the video tonight can be applied to your favorite market. Let's go S&P first. Let's go Nasdaq, and we'll wrap things up here on the crude oil. Now, don't forget, this is a 10,000 tick chart. All of these are tick charts here tonight. This is the 21 EMA. And of course, as always, I do like to give you guys some extra higher time frames, some 60-minute charts, some 4-hour charts that'll give you guys more of a frame of reference or a lens in which I'm looking at this. A lot of these higher time frames, especially the 60-minute time frames right now, are going to be very useful in comparison or in combination with the charts in front of me here tonight. So grab those links, the description of the video, if you want to see some of my higher time frame, bigger picture charts. With that out of the way though, what's the most important factor right now on the S&P 500. Most importantly, this is a very big move down into a trading range. We have an overall bear bias on the 60-minute chart now. Those key levels of resistance that we mentioned last night obviously held. Powell throws fuel on the fire. We're bearish right now, big move down into a trading range. And we have to think that with this big move down today, we have to be thinking that sellers are going to want to sell relatively high tomorrow. My favorite trade, knowing that bears have control into a range, ranges act like magnets. My favorite trade on the S&P for tomorrow is a relatively deep pullback, trap in some of these buyers, and ultimately use their stops as fuel for a run back down into that trading range. That's my favorite trade for tomorrow. Big move down. We assume that bears are not going to want to chase it going lower. They will want to sell relatively high. We get that nice pullback, trap those buyers in, and short back down into that trading range. I also think, though, because of the potential for tomorrow's JOLTS report being such a good number, right? Kind of a good news is bad news for the markets tomorrow. Because of that variable for tomorrow, I'm definitely watching for a shallow pullback off the high of this channel. I will definitely we'll definitely have that on our radar for tomorrow. And the third way in which I'd like to short the bounces is with a breakout pullback. If we keep going lower, I'd love to use the underbelly of this range combination with that channel. I'd love to use that area as a short spot or a chance to short the bounces as well. So those are the three basic ideas. You know my favorite trade for tomorrow. Let's unpack this, though, a little bit more here. Let's talk about, as we go higher here, kind of what to look for and how to really time the perfect entries to short these bounces. Now, remember, the most important thing right now is it's a very big move down. And so we have to anticipate that sellers are going to be a little bit more incentivized to sell relatively high. Obviously, we have a big news report tomorrow morning that may cause things to change. But right now, if all we get is a relatively shallow pullback, and by relatively shallow, I mean up inside this area, right around there, right? You want to be thinking as we pull back in a relatively shallow pullback, my concern is I don't want to sell really low. And so whenever I see a big move in one direction like this, and the only option I have is to sell relatively low, I have to use traps. We always talk about how shallow pullbacks require traps, and traps are very simple. We talk about these a lot in the free trading course. You want to try to find a way to get in above a prior high, like I'm demonstrating here, for that move back down. So again, trying to short the bounces, short the pops here tomorrow. But again, if all we get is that little tiny bounce there, and again, I could easily see that happening because the market has become very pessimistic right now after hearing from Powell, as he basically said, we're going to likely have higher rates than we expected in the long term right now. So see if we get the buyers coming in, see if we get them trying twice, and try to grab that little bull trap, right? A little two-try trap, we call it, in our trade room. The same trap setup you guys are learning in the free trading course. Now, that's one way to short a shallow pullback. If we get a deeper pullback now momentum becomes a problem. We're not so worried about selling close to those lows. We're getting a chance to sell high. When you get that big pullback like that, we pay a price for it, right? Now there's a lot of reward. Now we're not so worried about selling low, but momentum is very strong. So what I want to do is you want to look for one of these three types of variations of this deep pullback. I'll be keeping these on our radar tomorrow in our trade room. One of them is simply a two-try failure. So as we go higher, right, we simply wait for the buyers to come in, let them try a couple times, and literally sell into those stop losses. A lot of times, these two-try failures, it's basically a failure pattern like you guys are learning in the free trading course, but these two-try failures oftentimes will roll over, and then as they begin to run back to retest the low, because anytime we see a strong move down like this, we're expecting the price to pop up and retest that low here. On the way down to that low, find that channel, right, by drawing off the low, mark off that high, and then what do we always say? First test is the best test, and you want to grab that first short off the high of that channel. Now, I'm keeping it simple right now with this kind of trap setup I'm drawing on the screen right now. This could be a trap like I'm showing you right here. It could be a buyer failure pattern. It could be a pullback combination pattern. It could be a strength move as we're going lower. These are all the same entry patterns you guys are learning in that free trading course, which reminds me, by the way, we've talked about the free course a bit now, failures, traps, pullback combos. If you're one of the few folks watching right now, if you haven't taken that free trading class, what I'll do is I'll put a link up here for you in the upper right hand corner. I want you to learn all these entry tactics. So grab that link, take the free trading course, because the strategy you'll learn in that free trading class, the video series, will teach you a stupidly simple trick to know exactly where the best winning trades will be each day. And I'll make it easy for you to start making money by teaching you my 4 of my favorite entry patterns. If you're tired of missing the best trades right now, if you're not getting the consistent results that you want, grab that link. It popped up there in the upper right-hand corner. Take that free course, and you will learn all about deep pullbacks, trapping in the buyers, using stops as fuel, and then most importantly, as we roll over, grabbing those new hidden channels and running it off the high of that channel back down to retest a low. We see a lot of these sequences every week in our trade room, and we'll talk more about that. You'll learn more the details on that inside that free trading course. There's 2 more variables I want to cover on this, and then we'll talk about some more differences as we go lower. I do want to talk about as we go lower here in a moment. So we talked about the price popping up, 2 tries back down. Sometimes what happens is the market will pop up. That pullback is so strong, the buyers come in and they hold the pullback and they retest the high. This is not a reversal. This is even a better chance now to short that bounce, because now as the buyers retest the high now, you could easily say professional or experienced traders are buying low. The buyers that come in now and try to buy this thing into those highs, those are the rookies. I want to try to anticipate those rookies now, trying once, trying twice. And the reason why I use what we call the 2-try rule is because I want to use stops, right? I want those stops. I want all the buyers to have their stops sitting right there, and I want to short right into those stop losses, right? That's why I like to use this what we call 2-try failures. You guys will learn more about that in the free trading course, right? So once those buyers get trapped in, then a nice juicy signal candle will hopefully take this thing back down again. And again, we can go out now, start drawing trend lines off that low, find those channels, and we can grab those first tests off the high of that channel, right? Love that sequence. A slight variation, as you can tell. There's one more variation I want you to be aware of. It could easily happen tomorrow, especially since we got that big rollover after last week's big short squeeze. Let's say now we get that strong pop up, but now we don't get 1, 2, and then back down again. No, now the market is so many bears up here now, it gets crushed and runs right back down again and begins to bleed or grind down. These are pretty common. These are pretty common, right? Sometimes these bear markets like this, there's so many bears up there that you really don't get a good short signal, right? The key to this is if it starts to kind of V-top, right? If it pops up and turns right around and then begins to grind down like this, whatever you do, don't chase it, right? As we mentioned earlier, we don't want to sell low. We want to sell high. And the way you sell high is you mark a trend line off those lows, bring that trend line at the high, make a channel, and then what I do is I look left, I start finding swings, and I want to go in and I want to get that swing, right? I want to get that first test off the high of that channel. And again, my favorite entries on these are traps like this one. Oftentimes, these will slip back above. Oftentimes, these will slip back above the moving average. Buyers come in, try to be a buyer. You can use their stops as fuel for a failure pattern. Lots of ways in which we can short that thing, right, coming off the high of that channel. So keep that kind of third variation in the back of your mind here. The last thing you want to keep in mind here is the only way this thing turns bullish again is if we pop up, hold a pullback and begin to jump aggressively, right, off of that moving average. It seems very unlikely right now, but with big news tomorrow, that jolt support tomorrow, who knows, right? Who knows? So if you're wondering, okay, at what point does this pullback turn into a full-blown bullish reversal? It doesn't until we hold that pullback to the moving average. And again, they have to get a very convincing jump off the 21 EMA. Once they do, then we'll go out, find a new channel off the high or find a trend line off the high, mark that channel off the low, and then again, look left, find some prior swings, and we'll go looking for the entry patterns you guys are learning at the low of that channel, right? Again, doesn't seem very likely right now, but always a possibility whenever the Fed's involved. And again, tomorrow is one of those data-dependent news events tomorrow at 10 o'clock Eastern time. What do we do if we keep going sideways here? If we keep going sideways, nothing changes. At least in my eyes. If we keep going sideways here, nothing changes here. The only thing you got to be kind of careful with, and we'll talk about this more on the Nasdaq in a moment, if we keep going sideways and we roll lower and then spin back up, oftentimes the amount we go below the range is the amount we go above the range. That will give us a little bit more of definition of where that overhead resistance is going to be. We're still looking for the traps, right? Still looking to look to short those bull traps for that run back down. So not a lot of difference there if you go sideways. Just watch that kind of rotation up off the low there. Now, the next scenario I want to talk about here is what if we go lower, right? What if we end up going lower here right now? Like I mentioned, there are three basic ways to short the bounces, right? We short the shallow pullback trap, the deeper pullback reversal, or we're going lower and then using the underbelly of this range, right, as a key component. Why don't we talk about that now on the Nasdaq? The Nasdaq is quite different from the S&P. You'll see right away, there's quite a different look on this Nasdaq chart right now, but I think you'll see though that the nuts and bolts of this are going to be relatively similar here right now. We're definitely bearish right now on the Nasdaq. The most important thing you want to be aware of right now on the NQ is the fact that we had that very strong move down. You can see that beautiful 1, 2 kind of pop up that then rolled over, right? We talked about this last night on the video last night. But most important thing here is that strong move down, right? What do we always talk about? Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that level. Remember, right now the bears on the S&P are trying to get something like this, trying to get that deep pullback and retest the low. Well, now where are we? Now we're sitting right on that low. So not a very comfortable spot right now to be a seller on the Nasdaq. We're definitely bearish. There's no doubt about that. Again, you'll see a lot more updated, higher time frame, 60-minute charts, 4-hour charts, the description of the video here tonight. But this is a very difficult place to want to be a seller. You really have to think right now that if it wasn't for that trend line coming down overhead, and think about this, it's very similar in the sense that if we pull back, really have to be careful here with a shallow pullback trap. Definitely not my favorite trade on the Nasdaq. My favorite trade on the Nasdaq would be, let's get a rotation. Let's get this thing rotating now, either up around these highs, which seems a bit unrealistic right now. It seems a heck of a lot more realistic to connect these lows, bring it up around these highs up here, right? Get that rotation, get that reversal, those 2 try failures off the high. That seems very, very realistic here for the bears. And that, of course, is my favorite trade on the Nasdaq for tomorrow. It could really be anywhere right in this area. So remember back in the S&P, we talked about those 3 variations. It was a 2-try failure. It was a double top reversal back down, and that V-top, right? That kind of grinder going lower. So definitely keep those on your radar. And boy, I'll tell you, very difficult to see the buyers taking control of this for very long tomorrow, because you'll notice if you widen this thing out a little bit, draw that trend line off that low, bring it up around this high. I mean, look at all those spots up there, right, for these bears to gobble this thing up. So if we can get that, again, if we're lucky, we'll get that really, really deep pullback there, trap those buyers in, and use their stops, right, as fuel for failure into first test off the high, right, coming off that high. That would be great. But again, it doesn't seem, we'll see, right? We'll see how this JOLT support goes tomorrow morning. The big factor on the NASDAQ, which we haven't talked about yet, and will also apply to the S&P, is what if we keep going lower? I mean, come on, right? And you'll see this on those 60-minute time frames in the description. I mean, we have a long ways to go before we get anywhere near some of those big lows here on the S&P and the NASDAQ. Both the S&P and the NASDAQ have just a mile to go right now. And oftentimes, when you've got all this open space below you like this, oftentimes markets will do more. They'll be more aggressive than you would normally think they're going to be. So how do we trade this if the market now starts to run kind of aggressively lower? And again, this is going to apply here to the S&P as well. What you want to think about here, there's kind of two basic ideas if the market begins to aggressively go lower here. And this kind of, we talk about this a lot on these videos. As we're going lower, the key to selling it in the short term are bull traps. Right? Remember, we don't want to sell low, but if we start going aggressively lower, there'll probably be some tighter channels here, and we can find some bull traps going lower. Once we end up kind of getting a bigger move down, later in the morning tomorrow, then we start waiting for those pops up. We start looking for larger channels, right, like this. And this is where you really get those big, deep pullbacks using the underbelly of these ranges. And you can begin to kind of come in here and use those buyer failures, as we talk about in the free trading course, for that run back down. So this is kind of the sequence that you want to have kind of in your mind here as we go overnight into the early part of tomorrow, and then especially later on in the session. The same thing is true here on the S&P, right? If the S&P, if we really start to accelerate going lower, the way that you short these things is you wait for that bounce, you short those bull traps, right? Those bull traps, right? Trap high above the high, and then eventually, once we get quite a bit lower, now we get to back off. Now we start finding bigger channels here. Now we start identifying the underbelly of that range. We get those deeper pullbacks, get up above the moving average, trap those buyers in, use their stops as fuel, and that run back down. So it's kind of the same basic idea there on the S&P. Just want to make sure you guys can see that, because I know a lot of you guys are Emini traders as well here. So that's kind of the key component, right? If we do end up running lower. So as we're going lower, we start to see things accelerate going lower here. Look for those strong moves, those shallow pullbacks, those lower low in price, and then again, those traps above the high. And then once we get this price kind of going, once we've got this thing really kind of running lower and we start getting a bit too low to want to sell down here, again, think about where you've got, right? Think about where you've got the, right, where you've got the larger channels here off those lows, off those highs, mark up those prior swing levels, because those, of course, are going to be additional levels of resistance as well. And then it's simply a matter of waiting for the pullback, right? So we're getting aggressive on the way lower, selling bull traps above the highs. And then once we start getting this thing going a bit too far, then we wait for that pullback. This could be the 10 o'clock news tomorrow morning, kind of getting this thing to jump higher here. And as it jumps higher back into these highs, it's so bearish overall that now we get back above the moving average. Look for buyers to come in and foolishly buy off the moving average. That's your failure pattern. And then usually, again, these deep pullbacks, these failure patterns will end up triggering shorts or stop run. And as the market rolls lower, we can then look for those larger, right, those larger channels or large move back down, pop up above the moving average, on that, right? Buyers try and fail. And then again, stops get run into pullbacks. I love to find those channels off the low, channel off the high, right, and grab that first test off the high of that channel. So definitely keeping that on my radar here for tomorrow. How would this deep pullback turn into a reversal? It would have to hold that pullback off the moving average and rip, right? They have to hold the pullback. Remember, they haven't done that yet. So they have to get this price going lower. They have to pull back up, get above that moving average, and have to really rip this thing off that moving average. And really, even then, even at that point, you still have all of this overhead, resistance overhead. So still, the buyers may get a reversal off that low, but it may not last very long, right? As we go higher now, buyers once, buyers twice, and that short back down again. You know what I mean? There'll be a bigger channel coming down here overhead. So looking for those aggressive traps on the way lower, and then again shorten that bounce here. The only other kind of variable of this, which you want to kind of keep in mind, is a pop and grind. If we were to start to kind of grind down as we go, right, you may not get that real strong acceleration going lower. Those are pretty easy. Again, just simply mark off that trend line, bring it up around these highs, right? Go looking left. Find those prior swings, get above prior swings. That's where traps live. Get above the 21 moving average. Let those buyers come in and try to buy it. And then again, look for the failure into pullback combination. If we do get that pop and grind, usually that first leg and the third leg are going to be symmetrical. So if we start grinding down here overnight, right, we already know how big that leg is. Once we know how deep that pullback is, then we can go out and kind of copy and paste the size of that first leg onto the high of that pullback, and that will help us to at least know exactly where this market wants to go. First leg equals the third leg as we try to make the move lower. I've got that 12 level, of course, below us there, but that might be a paper napkin on this way back down here to retest those lows here, 11,832. So keep those three scenarios on your radar as we go lower, right? If we accelerate going lower, it's those bull trap above the high, right? As we get deeper, think about that deeper pullback, trapping the buyers of the high of that channel. And again, if it simply pops and grinds going lower here, think about that pop and grind channel, and we'll look for the entries. Again, the same stuff you guys are learning in the free trading course off the high of that channel, first leg, third leg, right, to be your objective as we go. All right, guys, so plenty of ways here to short the bounces right now on both the NASDAQ and the S&P. Should we wrap things up in the oil here tonight? Let's do that. Let's grab the oil here. Oil is an interesting chart as well. Oil, of course, is also quite bearish. As you can see, we have a very strong move down on the oil. Oil undoubtedly getting dragged lower along with the rest of these markets today. Big separation off the 21 EMA. We know that anytime we see a strong move in one direction, we expect to pull back and a retest of that level, right? That's kind of how the game works when it comes to strong moves. The challenge we have right now is we have a quite obvious big support trend line coming up underneath. You'll see where this comes from on those 60-minute and 4-hour charts. So we're definitely not, we don't want to be too aggressive, right, trying to sell this thing, because again, you can expect that bears are going to want to sell high. I've got my eyes on some key levels up overhead, as you can see. And even though this is a very different scenario than the S&P and the NASDAQ, the fundamentals are pretty much the exact same scenario. My favorite trade for tomorrow is a relatively deep pullback, trap the buyers in, use one of those 2-try failures, and short this sucker back down to retest a low. That's my favorite trade for tomorrow. We may not get it. Again, we got some big news tomorrow morning. Shallow pullback is a bit of a risk right now, or a bit of a gamble right now, because you've got that trend line in your way. It's a lot of momentum though, which means it definitely can be traded, but we have to make sure we're not selling too low. And to do that, we have to use a trap. Trap setups are always my favorite whenever I'm concerned about selling into support. All right, but I still want to be a seller because I've got all that momentum going lower, right? I can't buy this right now. It's way too bearish here. That move down is way too bearish to pick a bottom on this. So a shallow pullback trap a deeper pullback reversal, right? Which again, when you get those deep pullbacks, they're great because they give you a good risk reward ratio, but you pay a price with momentum. And so you want to let them try a couple times, right? Let them try once, let them try twice. Use those stops as fuel to go back down to retest the low. They may go up. Don't forget, they may go up. They may pull back and retest that high. That's perfectly fine. In fact, that's even better because now the buyers are getting out of their long positions now. Call the rookies in. The rookies come in. They try a couple times here, and we can now sell into those stops. This, in all reality, is a more reliable trade because now the buyers who got in on that relatively deep pullback, they're now getting out at this high. And so now the buyers become sellers. The sellers are already looking to sell. And now we rope the buyers in, right? The rookie, inexperienced buyers get roped in, and we can now use their stops as easy cannon fodder to drop this thing back down to retest the low. And of course, that final one is the V-top, right? If we do run up and we get crushed back down again, the hardest part about these is not chasing it as it goes lower. Simply mark off that low, mark off that high, look left, and again, don't miss that first short. Again, it could be a trap, could be a buyer failure, could be any of the patterns you guys are learning right now in the free classes to go back down to retest the low. Also, too, on the flip side, too, if we were to roll lower, right? If we're to keep going lower here right now, we've got major lows right here. I can now use that trend line as an area of resistance. So you can see, again, it's quite different. The technicals are quite different than the NASDAQ and the S&P, but it's the same basic idea. So if we do keep going lower, I'm going to simply readjust this channel, move this down a bit steeper, and simply go in and try to use the underbelly or use the underbelly of this trend line now to trap in those buyers and look for that run back down again. It's the same basic idea we just talked about on the NASDAQ, right? On the NASDAQ, it was a range we were using, the underbelly of the range. On this oil chart, it will likely be the underbelly of this triangle. The key is just we want to make sure we get this thing to keep going lower here. It will likely bounce off that major low, right? Because, of course, it is a major swing. But again, remember, just because we're sitting at support doesn't mean we can't short this. That's a lot of momentum. That's a lot of momentum. Anytime we see a strong move, we expect a pullback and a retest. Let's use that channel. Let's use that trend line. And again, more importantly, let's use their stops as fuel to trap those buyers in and hit them right where it hurts, right? That's the easiest way to sell a pop. It's an easy way to short a bounce, right? Don't try to predict the top. Don't try to just, pick that top. Wait for those buyers to come in. Let them try, right? If it's a really deep pullback, let them try twice. On something like this, though, a one-try pullback or one-try failure should be fine for that roll back down to retest the low. So all the same kind of nuts and bolts we talked about on the NASDAQ and the S&P will also apply here to oil. So getting ready to short the bounces here for tomorrow. We get that big news at 10 o'clock Eastern time. Again, I wouldn't think that Jerome Powell will be the big catalyst for tomorrow. He'll likely repeat himself tomorrow at 10 o'clock. But we've got three big data points: the JOLTS report tomorrow, the non-farm number on Friday, and that it's going to be a big CPI number coming in next Tuesday. So now the game plan is all put together. We plan our trades on these videos. Tomorrow we trade our plan in the trade room. I would love to have you there trading right along with me. I'll put all the membership links, all the free video course links. I'll put all the higher time frame links, everything you guys need in the description of the YouTube video. So grab that and get more information there. If you need any help with anything we talked about tonight, the easiest and fastest way to get help is to call the office or send us an email or use live chat in the lower right-hand corner of all the web pages. It's very easy to get help if you reach out and ask for it. And as always, I do check comments and questions in the comment section below, so don't be afraid to drop questions in the comment section below. Guys, thank you so much for tuning in and watching all the way to the end. If you're watching right now, you are the person I do these videos for. So thank you so much for watching all the way through to the end. Now get out of here, get some rest tonight, enjoy the rest of your evening. I'll see you guys tomorrow morning 8 o'clock Eastern time in our trade room alongside all the other members. And if not, then if not tomorrow morning, we'll come back and do it again tomorrow night and get ready for a very big Thursday trading session. Guys, my name is Joseph. Thanks for watching. Be well out there. Be nice to each other as always, and be here next time. Adios, amigos. Bye-bye for now.